Hello everyone, let's start our today's discussion. So today is our last day of ATX webinar series, Practice to Pass sessions, which we started with December 2021 past paper. I hope you all remember the objective of our sessions, that we agreed that we will practice few past papers on the exam software, and I told you people that we'll try and do maximum in these sessions, and I'll share 3 papers recordings with you people on my YouTube channel, and then you people will practice the mock exam and will share me your solutions, on which I'll give feedback so that you people can improve your chances of passing the exam. In the previous 2 classes, we completed December 2021 attempt question 1, 2, and 3. Today, we'll be completing 4th question of December 21 attempt, and then we'll be moving towards another exam paper. I hope you all remember our discussions. WhatsApp group has already been made, on which I'm sharing the documents with you people. I have shared you people my WhatsApp number so that if you people want to coordinate anything, you can do. Okay? Let's start our today's discussion. We are doing question number 4 of December 2021 attempt. Now, explain with supporting calculations the capital loss which will arise on the sale of the antique chairs to Nettie and how this loss can be relieved. So we did this part A1. If you remember in the requirements tab, this was a requirement of 4 marks. We did calculation of disposal proceed less cost, and we looked at this part, had some discussion about part disposal. Okay, just a quick question. One student has asked, sir, where will we be submitting the mock exam for marking? You people can send me on my WhatsApp number a PDF file, and I'll try and mark it within 2 days after you send. Okay, but before moving towards the mock exam available on the ACCA practice platform, my advice would be that you people should complete at least 3 paper sessions with me. Okay, I'll guide you about my YouTube channel later at the end of the session also, so that you people can find further papers there. Now, so we completed this capital loss working on the proposed sale of antique chairs, and then in part A2, we looked at the availability of installment options for IHT liability in respect of investment property and antique chairs. I hope you all remember. Now we are starting our today's class with this part B, and then we'll read the question a bit, because obviously I hope that you people must haven't revised it. Okay, so let's start with this part. Calculate the guidance taxable income for the tax year 2021-22 on the basis that the personal service company IR 35 legislation applies to budgeted fees income receivable by Madeline Limited for the year ending 31st March 2022. So let's read detail about Medini Limited. Medini Limited is a personal service company for the purpose of IR 35 legislation. Has budgeted fees income wholly from relevant engagements £65,000 in the year ending 31st March 2022. Pays Cadden a gross and monthly salary of $1,500. Will pay Cadden a dividend of $35,000 on 28 February 2022. Neither Cadden nor Medini Limited has any other source of income. So, if you read it here, there is some detail given about Medini Limited. It is a personal service company, IR 35 legislation company. The budgeted fees income is $65,000 per year. Okay, it will pay Cadden a monthly salary of $1,500, and it will pay a dividend of $35,000. Neither Cadden nor Medini Limited has any other source of income. So if you read the requirement here, calculate the Cadden's taxable income for the tax year 2021-22 on the basis that personal service company IR 35 legislation applies to budgeted fees income receivable by Madani Limited. Now, if you people remember the IR 35 legislation, we used to calculate the deemed employment income. I hope you people remember the personal service company anti-avoidance, the objective of which was to convert the incomes of personal service companies into employment income, because personal service company was a company created to avoid tax. Okay, so let's do the working of IR 35 legislation. I want you all to concentrate on it. Deemed employment income calculation. Now, income received from relevant engagement. What is the income received from relevant engagement? Please listen to me. The income received from relevant engagements is £65,000 per year. So it's £65,000 per year income received from relevant engagement. Okay. Then less actual salary paid by company. Please confirm me if my audio and video is coming clear. Is it clear? Because one student is complaining. If other students can please confirm me. Okay, so I hope that the student which is complaining must be having a problem on her own side. Okay, so please listen to me. Deemed employment income calculation. Income received from relevant engagement is £65,000 less actual salary paid by the company. So the actual salary paid by Madani Limited is £1,500 per month. So please tell me, £1,500 multiplied by 12 months. So this will give how much? Can anyone tell me? £1,500 into 12 months, it's £18,000 of actual salary. Okay, then less employer NIC on actual salary. Now, what will be the employer NIC on actual salary? So if you open the tax rate sheet, now in the examination, the tax rate sheet will be given. Now, where it will be given, let me tell you. Now, in the examination, this tax rate sheet will be given here on the bottom, left bottom, help/tax tables. But as I told you earlier, that on the practice platform, this sheet is not updated. It's showing old rates. So on the practice platform, I have to use the tax rate sheet available with me, class 1 employer NIC till 884080, and after that it's 13.8%. So on 8840 it's 0%. So what I'll do is 18,000 minus 8840, on which the 0% will apply, and on rest the rate is 13.8%. So what will be class 1 employer NIC? 13.8%. So it's 1264. Okay. No other expenses are given for the company. Less 5% statutory deduction for the for the personal service company. I hope you all remember 5% statutory deduction. It is given so that the personal service company can make its own expenses. So it's 3250. Okay. Now, what is deemed employment income, including employer NIC? Can anyone tell me? 65,000 is the income from relevant engagement. 1264 is class 1 employer NIC. 3250 is the statutory deduction. Okay, 65,000 is the income from relevant engagement. Okay, one student is saying, sir, I cannot understand it. No need to worry. See, listen to me very carefully. Here it's written that Madini Limited. Okay, now you are asking that why the NIC is deducted twice. Okay, let me repeat that. Okay, once we'll go that, I'll tell you in detail. See, Madini Limited is a personal service company and IR 35 company. So whatever income it is earning will be converted into employment income for Credit. Okay, now Madini Limited is earning £65,000 less the actual salary paid by the company. Now what you need to understand is, just a second. What you need to understand is that the first NIC is on the actual salary. The first NIC is on the actual salary. Now this NIC of 1264 is on the actual salary. Listen to me. This NIC of 1264 is on the actual salary of 18,000. Now the remaining amount is also converted into salary. So 65,000 minus 18,000 minus 1264 minus 3250. So it's 42486. See, the student who asked me that, sir, I cannot understand that why the NIC is calculated twice. Listen to me. See, this NIC of 1264 is on 18,000 salary. Please listen to me. This NIC of 1264 is on 18,000 salary. Now the remaining amount of 42486 is also treated as a salary. So obviously you have to calculate the NIC on this amount also. Okay, see, this 1264 is the NIC on 18,000 salary. Now this is one more salary created, a deemed salary, an assumed salary. So what about the NIC on this deemed salary? What about the NIC on this deemed salary? You have to calculate the NIC on deemed salary also. Now, class 1 employer NIC on deemed salary. Now, how do we calculate it? 42486 divided by 113.8% multiplied by 13.8%. Now, what is the logic of doing this? Basically, the company has this amount remaining. Company got 65,000, from which company paid 18,000 as the actual salary. Then company paid 1264 as employer NIC. 5% was deducted for the company expenses. Now the remaining amount is 42486. Now this is the total amount which company has. So we need to extract the NIC of this deemed salary from this amount. So 42486 is assumed as a gross amount. 42486 divided by 113.8 multiplied by 13.8. So it's 5152. Okay, what will be the amount of notional salary? Okay, what will be the amount of notional salary? 42486 minus 5152, so it's 37334. When the examiner is silent, you calculate the notional salary in the normal way. Okay, now this is the normal calculation. This is the normal calculation of notional salary when the examiner is silent. Otherwise, he'll state about the size of the company. Okay, I'll repeat the things again so that if someone has any query, it gets cleared. Now, this is the calculation of notional salary, which I always say that it is a simple learning-based part. The tax department has defined simple calculation that you write the income received by the company less the actual salary, less the employer NIC on the actual salary. Employer NIC on the actual salary. If there are any other expenses like pension contribution or any other expense for the employees, that will also be deducted. 5% statutory deduction. Basically, this is left for the company expenses. Now, this 42486 is the amount remaining with the company. This 42486 is the amount remaining with the company because we started with the income of the company. Now, on this income, the tax department says that NIC is included in it. Why? Because company do not have any other funds to pay NIC. So we treated it as gross and we extracted the NIC from this. 37334 is the notional income which is left behind. Now, what is the question? Calculate the taxable income for the tax year 2021-22 on the basis that Personal Service Company IR 35 legislation applies. So now we have to move towards taxable income for CADIN. Okay, now actual salary of CADIN. Actual salary of CADIN. What is the actual salary of CADIN? Actual salary of CADIN is 18,000. Notional salary of CADIN is 37,334. So what is the total employment income? Okay, 18,000 plus 37,334. It's 55,334. Okay. Now, one important thing to list here. See, here it is written that Madini Limited will pay CADIN a dividend of 35,000. Now, converted the entire income of Madini Limited, since we have converted into notional salary, we will ignore this impact of dividend. Since we have converted the entire income of Madini Limited into notional salary, the entire income of Madini Limited is converted into notional salary, so we will ignore the dividend. Dividend will be ignored as dividend will be ignored as income of Madini Limited is converted to notional salary. Okay, now you will deduct the personal allowance because no other income is given. 12570, and this gives us the taxable income. Let me respond to queries of the student. There are some questions. 42764. Just give me a minute and then I'll move towards your queries. Yes, while you calculate the shareholders' taxable income, you include all types of salaries. Okay, we had to calculate deemed employment income. Income from relevant engagement was 65,000, less the actual salary. The actual salary is 18,000. Employer NIC on actual salary. The actual salary was 18,000. The employer NIC on actual salary is 1264. 5% statutory deduction. This gives us the deemed employment income, the assumed employment income. Now, since company has no other income available, okay, the NIC of deemed income is included in this amount. See, 65,000 is the total income, less the actual salary, employer NIC on actual salary, 5% deduction. Now, what you need to understand is that company do not have any other amount. So this 42486 includes the NIC on deemed income. Now we extracted the NIC of deemed income, and this is the notional salary. Now we had to calculate the taxable income for Cadden. So actual salary of Cadden was 18,000. Notional salary of Cadden was 37,334. Dividend was ignored because we converted the entire income of Madini Limited into notional salary, less personal allowance to arrive at taxable income. Is it clear? Is it clear, everyone? Is it clear? Okay, everyone, please tell me. Okay. Okay, some students are complaining that some connection issue. Okay, one student has said that she cannot understand the point about dividend. Okay, give me a second. Let me look at the connectivity issue. Is my connection good, or still is there any issue? Confirm. I'll respond to the queries if someone can please confirm me if my audio and video is clear or not. That okay, still it's not clear. Okay, just give me a second. Okay, now please confirm me, is my audio and video clear? Hello, everyone. Okay. Now, is the video working? Please confirm me. Which is it? The video is still frozen. Just give me 1 second. Okay, can you please confirm me that if the things are better now? I don't know that why this issue is creating. Okay, can you people hear me? Please confirm me. Okay, now is the video okay? Still you people can't see me. Just a second. Now am I visible? Thank God. Okay, sorry for the interruption. I don't know that why this issue has happened, but still, because since now I'm back in Pakistan and we do not have some good connections. I'm using 3 internets, but then that's why then also this issue happened. Anyways, let me give a review again, and let's look at it if someone has any issue. Okay, let's take a quick review what we were talking. So calculate, basically the question was calculate the cadence taxable income for the tax year 2021-22 on the basis that personal service company legislation applies on the budgeted fees income receivable by Madani Limited. Basically, if IR 35 will apply, then we have to do the deemed income calculation. Okay, now the company was earning a salary of income of 65,000. What does IR 35? Basically, IR 35 converts the entire amount into employment income. Because basically the personal service companies are created to avoid the employment income impacts. They are created to avoid the employment income impacts. So the IR 35 legislation simply converts. What does IR 35 do? It simply converts the income received by the company into employment income. Now, how do we calculate it? The actual expenses are deducted. Actual employer NIC, actual salary. 5% deduction is made so that if company do any legitimate expenses, that can be adjusted from. Now, this is the deemed employment income. Now, basically what you need to understand is that the total amount which company had was 65,000. From that, company spent actual 18,000. Company spent actual 1264. 5% is left for other company expenses. So 42486 is the actual remaining amount the company has. So the tax department say that we assume this amount as gross. You have to extract one more NIC from it. Now some students get confused that, sir, this was one NIC. This is second NIC. Why two NICs? See, this NIC is on salary of 18,000. This NIC is on this salary. Now 42486 is the gross amount. We divide it by 113.8 and we multiply it by 13.8. The 8840 band is only available one time. It is not available two times because we are talking about the same single employee. Okay, so this is the notional salary. Now this notional salary becomes 37334. It will come in the taxable return. Now one student asked that, sir, why the dividend income is ignored? Try and listen. Try and listen. The amount which the company is receiving, the amount the company is receiving is already converted into employment income. The amount the company is receiving is already converted into employment income. Now, if you will add dividend of 35,000 also from the company, it will exceed the total amount of the company. 18,000 of actual salary, 37,334 of notional salary, and 35,000 of the dividend also. How is it possible that company distributed more than it got? The dividend was in a situation when there was no notional salary. When IR 35 is applied and we have converted it into notional salary, then obviously there will be no dividend. Now, one student has asked that, sir, if the company would have any expenses other than these, for that, the company is given 5% amount. Now, when the company will make its actual tax return, it will write income of 65,000. It will deduct actual expenses. It will deduct notional expenses. So automatically, company will have net 3250. The company will have net 3250 remaining. From that, the company can do its expenses like board expenses, meeting expenses. Okay. Sir, why not calculated employer NIC on 18,000, brother? I have calculated. Please see, I have calculated employer NIC on this 18,000. This is the employer NIC on 18,000. Okay. And this is the employer NIC on the notional salary amount. There are two salaries. One is actual salary of 18,000 and other one is the notional salary. Okay. Is it clear, everyone? Everyone, please confirm me. Is it clear? If any query, please ask me. Okay. Now, this is the default calculation of personal service company rules. Yes, the 8840 band is available once for one employee. Since it is the same employee cadence, so 8840 band will be available one time to one employee. Okay. Now, in the recent Finance Act, for which you are giving the exam, there is some addition in personal service company rules for small and medium entities and for large companies. But since the examiner was silent here, so we used the default calculation. We used the default calculation. This is the default calculation. Okay. Now, one student has asked, sir, would Cadin have to pay employee NIC? Yes, on both of these employment income, Cadin has to pay employee NIC. But our question didn't ask about this. Okay. Now, one student has asked, sir, if the question would have asked to consider dividend. Now, once we have converted it into the notional salary, the dividend will be ignored. The question gave us the dividend of 35,000. The question gave us the dividend of 35,000, but this will be ignored because we have converted the entire income into notional salary. My friend, I told it very clear. Maybe you are misinterpreting me. On these both amounts, class 1 employee NIC will be calculated, But the question has not asked us. That's why I have not calculated it. But in reality, it will be calculated. The question has asked me to talk on the taxable income. That's why I haven't calculated the class 1 employee NIC, but in reality, it will be calculated. Okay? Any other question? Any other query? Sir, please explain the concept of how the large company. Okay, so you are talking about the changes in IR35 rule. What you can do is you can message me after my class and I'll send you my lecture on personal service company that will give you a clarity, because if I'll discuss the entire topic in this session, it will take up a lot of time. So you can message me after the class and I'll share you my lecture on personal service company. Okay, no need to worry. Okay, thank you. Now, let's come back. Let's resume back. So, what did he ask? There was a 5 marks requirement. Believe me, it is very easy. IR35 is just a clerical piece of work. IR35 is just a clerical piece of work. Okay. Now, let's move forward. What he's asking. Let's move forward. For the tax year 2021-22, for the tax year 2021-22, advise ML why the interest receivable in respect of a bank account in the country of Comore will be subject to UK income tax, and explain with supporting calculation why this will not actually result in any UK tax payable. Now, it's an 8 marks requirement. It's a very interesting requirement. Now, let's read the question about Comore, that what is the rule about and the issues about the interest income. It's a very interesting requirement. Let's read it. Amihl. Amihl is resident and domiciled in UK. Earns employment income of 45,000 every year. Receives interest income in respect of a bank account in Comore. Makes a contribution to personal pension scheme of £3,000 every year. Amihl bank account in Comore. On 1st January 2021, Amihl deposited 150,000 in a bank account in Comore. This bank account pays interest at a rate of 5% each year. Amihl will not remit any of this interest income. The tax regime in Comore is tax is withheld at the rate of 18%. The UK does not have a double tax treaty. Please read the requirement again. For the tax year 21-22, advise why. Please listen to me. Advise why Amihl interest receivable in respect of a bank account in country of Comore will be subject to UK income tax. I want answer from you people. Why the interest of Comore will be subject to UK tax? Why it will be subject to UK tax? Because Amihl is resident and domiciled in UK. She is resident and she is domiciled in UK. When you are a resident, you pay UK tax on worldwide income. And she is a domicile holder. So she will be assessed on a rising basis. So irrespective of whether she remit or not, she will be taxed. Okay? For the tax year 21-22, I advise AMHL why the interest receivable in respect of a bank account in country of Comore will be subject to UK income tax. AMHL is a UK resident, individual. Therefore, she has to pay UK income tax on her worldwide incomes. Okay, her interest income on deposit of Comore of how much? Her interest income will be how much? Can anyone tell me? On 150,000 deposit, the interest will be 5%. Can anyone tell me? Her interest income of 150,000 into 5%. How much is it? Her interest income on 1st January 21, AMHL deposited 150,000 in a bank account in Comore. The bank will pay interest of 5% every year. Okay, now we are talking about tax year of 21-22. She has made a deposit in the year January 21. So in 21-22, she will get whole year interest. In 21-22, she will get whole year interest, 7,500. Her interest income of 7,500 on deposit of Comore will be subject to UK income tax on a rising basis, as she is a UK resident and UK domicile holder. The examiner is confusing you. Why is he confusing you? If you look at here, some students might be prorating it for 3 months. Please do this. Wake up. She made a deposit in January 21. She made a deposit in January 21, and we are talking about the tax of 21-22. The tax year of 21-22 starts from April. Okay, she will be taxed on a rising basis because she is a resident and a domicile holder. Okay, on deposit of Comore will be subject to UK income tax on a rising basis, not remittance basis, a rising basis. Okay, she will be taxed. One student is asked, what is a rising basis? Individual overseas, there are 2 bases of assessment. One is a rising basis in which you pay tax irrespective of you remit or not. Please don't ask such questions. We are just 10 days away from the exam. Individual overseas issues are rising basis, remittance basis. Okay. If you don't remember, please refer the summary notes and do a revision. Okay. Remittance basis will not be available. As she is UK domicile holder. Automatic remittance basis is also not available as unremitted amount is more than £2,000. Okay, so it will be taxed on a rising basis. The question says that she will not remit. Okay, UK income tax will be charged irrespective of remittance basis, irrespective of remittance to UK. Is it clear, everyone? For the tax year 21-22, advise Camille, why the interest receivable in respect of a bank account in the country of Comore will be subject to UK income tax. Okay, yes, the automatic remittance basis is available to everyone, but for automatic remittance, your unremitted amount should be less than 2,000. Is it clear, everyone? Now, explain with supporting calculations why this will not actually result in any UK taxpayer. Now, believe me, I don't know about this. No one knows before calculating it. So let's calculate it and let's see that why the actual tax will be zero. For this, the only reply is should calculate it. Why this will not actually result in any UK tax. Now, if you just read this statement, you don't have an answer. Because the student will think that I'm getting interest income of 75. No. Now see, due to personal allowance. Why due to personal allowance? She earns a salary of 45,000 already. So the employment income will cover the personal allowance. I don't know. So let's calculate it. Okay. Let's think that we are in the exam. We don't know about the solution. Let's calculate it and find that whether in actual there will be any tax or not. Nil rate bank. Let's calculate it. Believe me, it's my advice that don't make your estimates. Let's calculate it. Now, Amihal, UK income tax. There is one head of non-saving and one head of saving. She earns employment income of how much? 45,000 if I'm not wrong. Earns employment income of 45,000 every year. Okay. Then there is interest income, which we identified 7,500. So this gives total income 45,000 and 7,500. Then there will be personal allowance. So that is 12570. So can anyone tell me the taxable income? 45,000 minus 12570. So it's 32,430, and here it's 7,500. Okay, let's charge income tax on it. Please listen to me. See, it's very easy for me to just open the examiner answer and read that answer with you people. But I always solve with you so that you people can understand the real feel of the exam, that how we'll reach the solution. Now, for income tax, he says that Anil makes a contribution to personal pension scheme of 3,000 every year. Of 3,000 every year. So this will extend the basic rate band. Okay. Basic rate band will extend by gross personal pension contribution. Okay. So gross PPC is, she made a contribution of 3,000 pounds divided by 80% multiplied by 100%. So the gross PPC is 3750. Basic rate band will now be 37,700 plus 3750. So it's 41,450. Okay, so now we have to calculate the income tax. There is non-saving income. So why did we divide it by 80%? We gross up the personal pension contribution. We always gross up the personal pension contribution. Now that's very basic. You shouldn't be asking this. Okay, and so non-saving income lies in the basic rate band 32430 into 20%. So 32430 into 20%, it's 6486. Now we are moving towards saving income. Now what about the 0% band of saving income? Please listen to me. Total taxable income is 32430 plus 7,500. What is my total taxable income? It's 39930. It's 39930. As basic rate band is now of 41450. Therefore, Amihal is a basic rate taxpayer. She will get 0% band of 1,000 pounds. Believe me, you people give so many wrong answers on the question tab because you people have a disease of rushing. You have to rush. I don't understand that why you people answer the exam paper in form of rapid fire round. You pay such a heavy exam fees and your time is so important, but then also people have to answer in rapid fire. Many students giving wrong answers. So 500, why 500 marks? You just calculated the basic rate band. You don't have the patience to add up the taxable income and then compare it. This is the reason why people do errors. Now, one student said that's because there is some withholding tax. There is no withholding tax on interest income. Please, your time and your money is very important. Don't rush in the exam. Think slowly. It's advanced taxation. There are many small rules. If you rush, you'll make an error. It's your choice. Now, I know the answer from the very start, but then also I didn't told you the answer. What did I say? I don't know that why the tax will be 0. Let's calculate it. Because I want you people to understand the approach that how you will do in the exam. Don't rush towards conclusion. Solve it in the exam. Now, saving income on 1,000 pounds, it will be 0%, so it will be 0. Now, and on remaining 7,500 minus 1,000, since Amihal is a basic rate taxpayer, so it will be 20%. 6,500 into 20%, it's 1,300. Now, by now, what I can see that there is some tax on the saving income, but there is some double taxation relief also. Why there is some double taxation relief? Listen to me. Double taxation relief will be available on interest income of Komur as it is already taxed in Komur also. If you read it here, tax is withheld at rate of 18% arising in Komur. Overseas tax of 18% is paid in Komur. Now, UK does not have a double tax treaty, but you people need to remember that even if there is no double tax treaty, then also you get DTR. Even if there is no double tax treaty, then also you get DTR. So, double taxation relief will be lower of 2 things. Can anyone tell me? UK tax on overseas income and overseas tax. Okay, now, so the interest income was 7,500 on which overseas tax was 18%. So it's 1350, and UK tax on interest income was 0. You can see a 0 here. You can see a 0 here and a 1300. 0 plus 1300. So UK tax on overseas income is lower off. So you will get DTR, which will make your tax on interest income fall to 0. Now your total tax payable will be 6486, but that is due to your employment income. So you can write a statement here: UK tax on interest income of Komur has fallen to 0 as it is covered through double taxation relief. See, when I started this part, please listen to me. When I started this part, what did I say to you people? I don't know this answer. I don't know that why the tax will be 0. He stated the statement. We explained with supporting calculation that why this will not result in actual tax. So I said, I don't know. I have no idea about this. I have no idea about this. And this is what you have to think in the exam. That if I don't have any idea, I'll start calculating the tax. Now, what you people do, listen to me. You don't start calculating it. You stop and you start thinking, oh, there may be this rule, this rule, this rule, and you try and find some shortcut. This is wrong. This is wrong. You said that you have already stated that there will be UK tax, and now you know that when there will be UK tax, there should be some amount. Why it will be 0? I don't know. So let's start calculating it and have some faith. Have some faith and start calculating it. So here you can't take the shortcut when calculating DTR, as saving income considers the nil rate band. How did you know that where the personal allowance will get utilized? You have to think about gross PPC also. So if you will think about any shortcut, believe me, thinking about the shortcut will take more time rather than in calculating. Okay? See, teaching through a shortcut is very simple for me because I know the answer directly. I can say, okay, see, this will happen. Now that is wrong. When you are a student and you sit in the exam, you have to do like this. Okay? So what I say to my students is that rather than directly reading the exam answers, it is better to solve few papers, because when you will solve the papers, you will learn the approach. So if you look at this answer, it's just a minute, it's December 2021, answer number 4. If you look at this entire answer, part A was something very easy. It was related to some part disposal working, believe me, very easy. We discussed it in the previous class. Then there was installment option on investment property in shares. Today we started with IR 35 calculation. And last one was interest income calculation. Okay. Now, one student said, in some questions, you can simply compare the tax percentage of overseas and UK. Yes, this can happen when overseas tax rate would be higher than UK. Then you can say that the entire UK tax will be eliminated. Here, the UK tax rate of 20% was higher. So you cannot conclude it directly that the entire UK tax will be eliminated. Okay. If you'll say that DTR will be lower of UK tax and overseas tax, so the overseas tax is 18%, then the UK tax should be higher. But here the actual UK tax was coming lesser due to the 0% VAT. And that 0% band also only because you have to adjust the personal pension contribution PPC, because normal taxable income was exceeding the basic rate band. So you had to think about the PPC, gross PPC impact also. Is it clear? So if you look at this entire paper, we just completed our one paper. It included 4 questions. Question 1, 2, 3, and 4. I hope you all remember that we did question 1 and part A of second question in the first session. Okay. The question number 1. Okay. That was about the, just a minute. We did question number 1. Okay. JAG limited group issues, group planning tax matters. Then we move towards question number 2. That was Lucille. Okay. Lucille issues. Then we did question number 3 in the previous session. Okay, Sabine and Pattern Limited. And today we completed our question number 4, that is Amil. Okay. Now what I'm doing is I'm moving forward towards one more paper. Because as you remember, I told you people that we will be doing series of papers. Now, if you go to the practice platform in Advanced Taxation tab, we are doing UK ATX. Okay, in ACCA official resources, past exam library, we just completed this paper of December 2021. Okay, June 2021 paper is already solved by me. December 21, I just solved it with you. June 21 paper is already solved by me and it is available on my YouTube channel. You people can go on YouTube. I shared the link of that also. On YouTube, you have to go on OS Mirchawala. Then on OS Mirchawala, you will go here, ATX past paper discussion. Go to my channel OS Mirchawala, and here in the playlist, you can find my full playlist of ATX past paper discussion. Currently, June 21 entire paper is available here for you people. I'll upload the December 21 paper, which we have completed during these sessions, also on my YouTube channel. Okay. And as promised, one more paper. Okay. If we go to practice exams, I am sharing practice exam 2 with you people also. Okay. Now, what is the advice for these last days? Some students are asking. My advice is that you people should complete these 3 papers, past paper discussion sessions, December 21, June 21, available here on my playlist. I'll add December 21 also here. And one more paper, which is practice exam 2. Okay, and then you people have to do this mock. See my mouse cursor, pre-June 2022 mock exam. Once you people solve this mock exam, you people have to share me your solutions PDF on my WhatsApp. Okay, along with these past papers, I want you people to revise your rules, give some time to revision also. Okay, now I'm clicking on practice exam 2. Now what I have done is that since I knew that we have very less time available in these webinar sessions, I have already attempted question number 1 and 2. Okay, I'll share the video recordings of question number 1 and 2 here on my playlist. Okay, now Since we have very less time, what we are doing is that we are starting with question number 3 and 4 during our today's session. We will try and do question 3 and 4. We don't have sufficient time in the session to complete question 1 and 2. So we'll do 3 and 4, and I'll share the complete paper recordings here on the playlist. Okay, so you have to do December 21, which we have done. You have to do June 21 from our playlist, and this practice exam 2, which is December 18 paper. Once you have watched all these 3 papers, then you have to attend the mock exam and share. Okay. So what topics should be revising most in these days? See, in advanced taxation, you cannot pick up, cherry pick the topics. You have to complete whole course. But still, the routine topics include group losses, individual losses, individual tax administrations, employment share schemes, basis period calculation, individual overseas issues, inheritance tax. In CGT, you can do the reliefs. Now, what your strategy should be in these days, that if you wake up in the morning and you have the exam leaves from your offices, you can do few papers, like in the first half, you can do the past papers, and then in the second half, you can do the revision of your course. Daily try and complete these 3 papers first, and then do some papers on your own on the exam software. In the first half, do complete papers, and in the second half, do the revision. Okay? So now, we are moving towards question number 3 and 4 of practice exam 2. I will share the question number 1 and 2 of this practice exam on my playlist here. Since today is our last day of live sessions, so obviously we cannot do the entire paper. So we'll do with smaller questions, and I'll share the question 1 and 2 with you people here on the playlist. Okay, so let's start. You should assume that today's date is 7th December 2022. LIBOR has requested advice on the timing of the sale of the shares which he acquired in a recent company takeover. His sister Vesta requires advice on the tax consequences of making a lifetime gift rather than leaving assets in a state upon her death. The following exhibit is available on the left-hand side of the screen. Okay. This information should be used to answer the requirements. So let's read the scenario. I want you all to concentrate on it. LIBOR is UK resident and domiciled. LIBOR has taxable income of £30,000 each year. LIBOR acquisition of ordinary shares in Mercury PLC. LIBOR purchased 8,000 shares, a 40% holding in Vulcan Limited for £14,000 on 1st July 2012. 800 shares for £14,000. Mercury PLC acquired 100% of the share capital of Vulcan on 1st January 2022. In exchange for each ordinary share in Vulcan Limited, LIBOR received the following: 4 ordinary shares in Mercury PLC, valued at £20 per share immediately after the takeover, and £15 in cash. Mercury PLC has 200,000 ordinary shares. LIBOR has never been a director or employee of either Vulcan or Mercury PLC. The takeover was for bona fide commercial reasons, and it was not for tax avoidance. Okay, now LIBOR proposed transaction in Mercury PLC. LIBOR now wishes to sell all his shares in Mercury PLC. LIBOR has received an offer from an unconnected person to purchase these shares on 1st January 2023 at a price of £28 per share. Okay, LIBOR would prefer to sell the shares to his nephew, Janice. However, this would delay the sale as his nephew will not have the necessary funds to purchase the shares until 1st May 2020. Janice said he will also pay £28 per share. Vesta is 66 years old, has never married or had a civil partner, is in ill health, is expected to die at some time in the tax year 23-24. Has made no disposal for CGT 22-23 to date and will not make in the next year. So then we have some detail about Vesta also. So currently, let's stick to LIBOR only. Let's read the requirements and we'll come back. Okay. Now, what he's saying. So, explain with supporting calculations the CGT implications for LIBOR of the takeover of Vulcan by Mercury PLC and a subsequent sale of his Mercury PLC shares on 1st January 2023. Explain with supporting calculation the CGT implications for LIBOR of the takeover of Vulcan by Mercury on 1st June and a subsequent sale of his Mercury PLC shares on 1st January 2023. How many marks? 8 marks. Let's look at it. I want you all to concentrate on it. Question number 3. LIBOR. This is the first requirement. Okay. I want you all to concentrate on it. Now, explain with supporting calculation the CGT implications for LIBOR of the takeover of Vulcan Limited by Mercury PLC. Now, let's see the implications of the takeover and then the subsequent sale. I want you all to concentrate on it so that you people can understand in a better manner. Now, LIBOR purchased 800 shares in Vulcan for £14,000. Okay, LIBOR has purchased how many shares? He has purchased 800 shares in Vulcan on 1st July 2012, and then there is a takeover transaction. Okay, so if you look at it here, now this is some useful information. LIBOR purchased 800 shares, a 40% holding in Vulcan Limited for a cost of £14,000 on 1st July 2012. Mercury PLC acquired 100% share capital of Vulcan on 1st June 2022. As it is a paper-to-paper takeover transaction, therefore, new shares will be acquired at cost of old shares. This is a takeover transaction. Paper-to-paper takeover relief will be available as transaction is for bona fide commercial reasons and its objective is not to avoid tax. Okay, see, here it is written, the takeover was for bona fide commercial reasons and it is not for tax avoidance. Now, what is the consideration we are getting? 4 ordinary shares and £15 in cash. I hope you remember the rules of paper-to-paper takeover. See, LIBOR had 800 shares in Vulcan at a cost of 14,000. Mercury PLC acquired 100% shares. Okay, now let's do the working of cost allocation. Please listen to me. Please listen to me. Consideration. What is the consideration? Ordinary shares and other one is cash. How many ordinary shares? 4 shares. 4 ordinary shares in Mercury and 15 pounds of cash. Are you people listening to me? And 15 pounds cash. 4 ordinary shares against each share and 15 pounds in cash against each share. So we had 800 shares multiplied by 4. How many shares will we get? 800 into 4, it's 3,200 shares. And 15 pounds cash multiplied by 800 shares. So it's 12,000 pounds. Okay? 4 shares in Mercury valued at 20 pounds and 15 pounds in cash. And we had 800 total shares. So valuation 3,200 shares multiplied by what is the value of each share? The value of each share is 20 pounds. Okay, 20 pounds. So it will be 3,200 into 20. It's 64,000. And the cash has value of 12,000. So the total value will be 64 plus 12, 76,000. Just listen to me. I will repeat the things again. So if there will be any query, it will get clear. Just listen to me. Consideration. Okay, this is the valuation. And then we used to calculate the percentage. What is the percentage? 64,000 divided by 76,000. It's 84.2%. And here 12 divided by 76. It's 15.8%. Now we'll do the cost allocation. Okay. So how do we know that we have to calculate the cash amount instead of 800 into 4? Didn't got it what you are asking. He has got two considerations. One is shares and one is cash. Okay. We had 800 shares in Vulcan. We got 4 shares and we got 15 pounds in cash. There were two considerations. Shares will be valued at market value, cash, and then I have calculated the percentages. But exactly you are trying to ask, please ask it again or give some clarity. Okay, now let's do the cost allocation. Our old cost was 14,000 pounds. Sir, how do we know that we have to use 800 shares to calculate the cash amount? It's written here. If you'll read it, you'll find in exchange for each ordinary share in Vulcan. How many shares we have Vulcan? We have 800 shares of Vulcan. We are getting 15 pounds in cash. So 800 shares in Vulcan multiplied by 15 pounds in cash. Okay. 800 shares into 4 shares in Mercury. So that's 3,200 shares. Okay. We had 800 shares in Vulcan. I hope that I've cleared your query. So the total cost was 14,000. How it will be allocated? It will be allocated on the percentages 84.2. So here it's 11,778. And here the cost allocation will be 15.8. So it will be 2212. I'll repeat it again if someone has any query. See, it is a very basic calculation, believe me. There is nothing difficult in it. Liber purchased 800 shares in Vulcan for a cost of £14,000. Mercury acquired Vulcan. There was a paper-to-paper takeover. We got 4 shares and we got £15 in cash. So for 800 shares, we got multiplied by 4, 3,200 shares and £15 in cash, which is 12,000. This was the valuation. We calculated the percentage of valuation and then we allocated this old cost of 14,000. Okay. Now, chargeable gain on cash portion. Chargeable gain on cash portion will be calculated at time of takeover, that is on 1st June 2022. Okay, on cash portion we immediately calculate the chargeable gain, disposal proceed of cash portion. So we got 12,000 of cash portion proceed, cash received on takeover. Okay, cash received on takeover is £12,000. Cost allocated on cash portion. What is the cost allocated on cash portion? It's 2212. 2212. So chargeable gain of cash portion is 12,000 minus 2212. So it's 9788. Okay. Please confirm me if you people are understanding it. Rest will be deferred. 9788 is chargeable. On share portion, we don't calculate the gain. Okay. Your voice is gone because I was not speaking anything. That was it's gone. Can you hear me? Now I'm speaking. Can you people listen to me? Please confirm. Hello. So the disposal proceed of cash portion was 12,000. Cost allocated on cash portion is 2212. This gives us chargeable gain of cash portion. Okay. So now if you look at the scenario and subsequent sale of Mercury PLC shares on 1st January 2023. Subsequent sale of Mercury PLC shares on 1st January 2023. Now, if you read the scenario, he is selling the shares of Mercury PLC shares. If you move forward, Liber now wishes to sell all his shares in Mercury PLC. Okay. He has received an offer from unconnected person to purchase these shares on 1st January 2023 at a price of £28 per share. Okay, so he now wishes to sell these shares. Okay, sale of Mercury PLC shares on 1st January 2023. Again, 2223 will result in chargeable gain. So he is willing to sell shares of Mercury PLC. What is the disposal proceed? So he had 3,200 shares. Please listen to me, everyone. He had 3,200 shares and he has got offer of £28. He has got offer of £28 per share. So what will be the disposal proceed? Can anyone tell me? 3,200 into 28. It's 89,600. less cost. The cost on Mercury PLC shares was 11,778, 11,778. So this is the chargeable gain. What will be the chargeable gain? 89,600 minus 11,178. So it's 77,822. Is it clear? Please tell me. Everyone? Now, so what he's asking, explain with supporting calculation. Explain with supporting calculation the capital gains tax implication for LIBOR of takeover of Vulcan Limited by Mercury PLC on 1st January 22 and the subsequent sale of his Mercury PLC shares on 1st January 2023. Now we have to calculate the CGT. Calculate the CGT. So let's calculate the CGT also. Sir, do we have to reduce the cost with the gain we deferred earlier? See, please listen to me. Here the deferral of gain was not like adjusting the base cost. The deferral of gain was that at the time of takeover, we just allocated the cost. At the time of takeover, we just allocated the cost. And we didn't calculate the gain at the time of takeover. At the time of takeover, we calculated the gain on cash portion only. At the time of takeover, let's read it. At the time of takeover, the gain was calculated on cash portion only. On the rest, we didn't calculate any gain. We just allocated the cost and we left it there. When we disposed of the shares, at that time, we used that allocated cost. Okay, so here the deferral is not like gift relief or rollover relief. The rule is that you just allocate the cost and you leave it there. When you will dispose the shares, you will use the allocated cost. Okay, now capital gains tax for 2022-23 will be, now we have to calculate the CGT implication. Okay, now, sir, shouldn't the paper-to-paper relief become chargeable when the shares have been sold? Yes, when I sold the shares, then only I have made it chargeable. If you look at it, I made the gain chargeable when I sold the shares. He sold the shares in January 23, my friend. He sold these shares. That's why the gain has become chargeable. On the cash portion, the gain gets chargeable on takeover. On the shares, the gain has become chargeable when he sold the shares. So, chargeable gain on cash portion. What was the chargeable gain on cash portion? 9788. Chargeable gain on disposal of shares, 77822. Okay, now the cash portion gain will get chargeable on takeover date of 1st June 2022, which lies in tax year of 22-23. Okay, gain on sale of Mercury PLC shares will be chargeable on disposal date of shares, which is 1st January 2023. Now this also lies in 22-23. Both the transactions are done in 22-23. Okay, so the total chargeable gain is 9788 plus 77822. So it's 87610. Okay, Now you will deduct annual exemption, 12,300. This will give you taxable gain. 12,300, it's 75,310. Okay. Now you will calculate the CGT. Are you people getting it? Please confirm me. Are you people getting it? See, believe me, it is very basic calculation. It is very basic calculation, believe me. But since it's lengthy, so some students get lost in between. So LIBOR purchased 800 shares in Vulcan for a cost of 14,000. Then there is takeover. Okay, we allocated the cost. On the cash portion, we calculated the gain. On sale of shares, we calculated the gain. As both transactions lie in same fiscal year, okay, we calculated the chargeable gain. Yes, in individuals, there is annual exemption. This is taxable gain. Okay, now I have some questions. What will be the rate of CGT? What will be the rate of CGT? Look at the scenario and tell me. Everyone, please. What will be the rate of CGT? 10 and 20%. What about badder? Will the badder be available or not? Yes or no? No rapid fire, first thing and then tell me. Will the badder be available? Badder, business asset disposal relief. Will it be available or not? No. Very good. Why no? Why badder will not be available? Yes, because LIBOR is not an employee. Okay? Badder will not be available because LIBOR is not an employee of Vulcan Limited or Mercury Limited. Okay? Now, what about the rate of CGT? LIBOR has taxable income of 30,000 every year. So the amount remaining in basic rate band will be 7,700 into 20% into 10% CGT. In basic rate band, it's 10%. Basic rate band of 7,700 is available as LIBOR has taxable income of 30,000 as per scenario provided. Okay, on rest of the gain, the rate of CGT will be 20%. 75,310 minus 7,700 into 20%, 13,522. Total CGT 14,292. I have one question from you people. Is this thing difficult or easy? I have one question. Was it difficult or it was an easy one? Now, many of you are saying it's easy one. But let's talk about the real exam situation. Believe me, the students will not be able to complete even 75% of this. You people will not be able to complete even 75% of this in the exam. Now the question is why? Why in the exam situation it gets difficult? Just think about it. See, it's my observation. I've been teaching this exam since last 30 attempts. It's my observation. When you go to the exam, you are so tensed and there's so much anxiety that you have no patience to do the requirements slowly. See, this requires a lot of patience, that you have to do the paper to paper work, the cost allocation, then gain on cash portion, then gain on sale of shares, and then the total CGT calculation. When I say that you people have to do complete papers at your home, you have to try these papers on your own. The basic objective is to make you people, I would say, used to of the exam situation. Because otherwise, when you go to the exam, there is so much pressure and there are so many things going on in the exam altogether that we cannot think of the logical sequence. See, if someone would be going in the logical sequence, he can easily do it. Now, the examiner gave 8 marks for this requirement. Believe me, in these 8 marks, there is nothing involved of advanced taxation. It is all basic tax workings. It is all basic tax workings. There is nothing involved of advanced taxation here. There is nothing involved of advanced taxation here. It is all basic taxation. Okay? It is all basic taxation. There is nothing involved of advanced taxation in this entire calculation. But when you go to the exam, you need a flow, you need a sequence. That okay, you'll say we purchased the shares, then there was takeover, so I have to do the working of cost allocation. Then on the cash portion, I have to calculate the gain immediately. I have to look at the dates. I have to look at the fiscal year. Now, this is where what I say, that you people need practice and patience to deal with the exam situation. Then there is disposal of shares. Then I have to look at the CGT position. I hope that you people are getting it, that why I say again and again that you people have to practice a lot. Not the topical papers, do the complete papers. Because when you do the complete papers, you have to think with the badder and P2P together. You have to look at the basic rate band also. There are so many small things running in the exam. Okay? That some students think that just studying the topics again and again is the only solution. No. Studying the topics is something different, and practicing the papers is a something different issue. I hope that you people will understand why I emphasize on practice too much. Okay, let's do one more requirement. Explain with supporting calculation, 4 marks. Explain with supporting calculation why it will be beneficial for LIBOR to sell his Mercury PLC shares on 1st May 23 instead of 1st January 23. 4 marks. I want you people to tell me. Please tell me why it will be beneficial to delay the sale. Now let's think. Let's think like we are in the exam. Let's start thinking. If we'll delay the sale, what can happen? We can get better. Just think. If we delay the sale, what can happen? We can get better, but oh, the better will not be available because she's not an employee. So the better option is cut out. We can get gift relief. No, on sale there is no gift relief. We can get incorporation relief. On sale there is no incorporation relief. So what will happen? So suddenly a student can get an idea that January 23 was 22-23. January 23 was 22-23. It was the same fiscal year issue. That 2 transactions were lying in same fiscal year. So if she will delay the sale till May 23, what will happen? Listen, if LIBOR will delay her sale of Mercury PLC shares to May 2023, sale of shares will fall in fiscal year of 23-24, whereas takeover lies in 22-23. Listen to me. Cash portion gain will be chargeable in 22-23 and sale of Mercury PLC shares will get charged in 23-24. Different fiscal year will allow two annual exemptions and separate basic rate bands. I'll repeat it again. If LIBOR will delay the sale of Mercury PLC shares, if she'll delay the sale to May 23. Now just think that what will happen between January and May. Badder is not available. No other CGT relief is available. What difference will it create? The only difference between January 23 and May 23 is change of fiscal year. The only difference is the change of fiscal year. January 23 is 22-23 and May 23 is 23-24. If LIBOR will delay her sale of Mercury PLC shares to May 23, sale of shares will fall in fiscal year of 23-24, whereas takeover lies in 22-23 because the takeover has happened in July 2023, June 2022. The takeover has happened in June 2022. So takeover will fall in 22-23 and sale will lie in 23-24. Cash portion gain will be chargeable on takeover, will be chargeable in takeover in 22-23 and sale of Mercury PLC shares will get charged in 23-24. So what benefit will it be creating? What benefit will it be creating? 22-23 and 23-24. Chargeable gain of cash portion will fall in 2022-23. It was 97. It was 9788. And chargeable gain on sale of Mercury PLC shares, it's 77822. 77822. Now there will be separate annual exemptions, 12,300, because since it's a different fiscal year, there will be separate annual exemptions. Here, the taxable gain will fall to 0, and here the taxable gain will be 77822 minus 12,300. It's 65,522. Here, the CGT will be £0 because the gain is 0, and here the CGT will be on 7,700. It will be 10%, which is 770. Basic rate band of 7,700 is available, as LIBOR already has taxable income of 30,000 available. It's written in the scenario, and the remaining gain, just give me a second, 65,522 minus 7,700 into 20%. So it will be 11564. Total CGT £0. Total CGT 12334. Okay, CGT saving is Earlier, the CGT was 14292, and now it's 12334. So it's 1958. Okay. Let me repeat it again. Okay, so explain with supporting calculation why it will be beneficial for LIBOR to sell his Mercury PLC shares. Okay, on 1st May 23 instead of on 1st January 2023. So how do you merge these cells in table? Just make a right click on cell. Here is the option to merge cells. Okay, so if LIBOR will delay her sale of shares to May 23, it will fall in a different fiscal year. And when you go in the different fiscal year, you get a different annual exemption and you get entire fresh basic rate band also. Okay, so separate annual exemption. Here the gain reduced to 0. You get a basic rate band benefit. So as a result, your CGT has reduced. So we are done with 12 marks in this question. The first part was explained with supporting calculation, the tax implication for LIBOR of the takeover. So there was cost allocation and subsequent sale of Mercury PLC shares. Then delay of sale will give us 2 annual exemptions and 2 basic rate bands. Okay, I hope that it's clear. If we delay the sale, we will get a separate annual exemption in a new year, and obviously a basic rate band will also be available separate. Okay, now let's look at the final requirement, but we will solve it after the break. Let's take a short break so that we people can get freshed up, and then we start this last requirement. Okay, is it clear? Do anyone have any query? Okay, so let's take a break and then we'll resume in 15 minutes. Okay. Okay, so we are receiving back. Please confirm me if you people can hear me. So we were starting in relation to Vesta. Advise Vesta whether or not there are any capital gains tax or inheritance tax advantages for herself or for Janice if she were to gift investment property to Janice on 31st December 2022 rather than leaving it to him in her state on death. Let's read it. Information relating to Vesta. Vesta is 66 years old and has never married or had a civil partner. Vesta is in ill health and is expected to die at some time within the tax year 23-24. Has made no disposals for the purpose of CGT in the tax year 22-23 to date and will not make any in the tax year 23-24. Has made one previous lifetime gift of £350,000 cash to her son Janice on 1st June 2022. Vesta investment property. Vesta owns an investment property which has never been used as her main residence. The current market value of the property is less than the price Vesta paid for it. And when the price is less, this means that it is in loss, and its value is expected to fall further throughout the tax year 23-24. Vesta is considering gifting the investment property to Janice in her lifetime, rather than leaving to him in her state on death. Janice is the sole beneficiary of Vesta's estate. Okay, so basically, Vesta is about to die in 23-24. She has made no other disposals. She has made one previous lifetime gift of 350,000. Now there is some investment property which is currently in loss and its value is expected to fall further. Now Vesta is considering to give the investment property to Janice in her lifetime rather than leaving it to him in her state on death. Okay, now, so if you look at it, advise Vesta whether or not there are any capital gains tax or inheritance tax advantages for herself or for Janice if she were to give the investment property to Janice on 31st December 2022 rather than leaving it to him in her state on death. So what we will do, let's comment on capital gains tax implications first. I want you all to concentrate on it and participate with me. I have a question from you. If Janice will leave this Vesta will leave this property to Janice on death, what will be the CGT implication? Can anyone tell me? If Vesta leaves investment property to Janice on her death, if Vesta will leave investment property to Janice on her death, then what will be the implication on her death? Then there will be no CGT on death. Property will be transferred at market value on death. Property will be transferred at market value on death, and there will be no gain, no loss. Okay? Can you people hear me? Can you people hear me? If Vesta leaves investment property to Janice on her death, then there will be no CGT on that. Property will be transferred at market value on that, and there will be no gain, no loss. Is it clear? Now, what will happen? Can you please explain it? When we gift anything on debt, it is transferred at market value, and on debt there is no CGT. Okay, there is no CGT. On debt there is no CGT. Okay, on debt there is no CGT. Okay, just a minute. Issue. When we gift anything on debt, there is no CGT. On debt assets transferred at market value, there is no gain, no loss. Is it clear? If Vesta leaves investment property on her debt, there will be no CGT on debt. Property will be transferred at market value on debt, and there will be no gain, no loss. Is it clear? Okay, please. Now, let's talk about the gift on 31st December 22. What will be the implication if she gifts on 31st December 2022? If Vesta gives investment property on 31st December 2022 while she is alive, then there will be CGT implication on gift. While you are alive, when you give the asset, there is CGT implication. Okay, now if you read it, the current market value of the property is less than the price Vesta paid for it. So this means that the property is currently in loss. Okay, if Vesta gives investment property on 31st December 2022 while she is alive, there will be CGT implication on gift. As value of property is less than its cost, therefore capital loss will arise on it. Is it clear? But if you read one thing in the question, Vesta has not made any disposals in the tax year 22-23 to date and will not make any disposals in the tax year 23-24. She is in ill health and she will die in 23-24. Now listen to me. However, this capital loss of Vesta will get wasted as she had no other disposal in tax year 22-23 and in 23-24. She is expected to die in 2023-24. Okay, her loss will get wasted on her death. Please listen to me. See, it's an 8 marks requirement. What I'm doing is I'm developing the answer with you people so that we can think together. You people can understand the approach that how you have to develop the answer in exam. If Vesta leaves investment property to Janice on her death, there will be no CGT. On death, there is no CGT. Assets are transferred at market value. If she gives on 31st December 22 while she is alive, there will be CGT implication on gift. As value of property is less than its cost, therefore capital loss will arise on it. However, this capital loss of Vesta will get wasted as she had made no other disposals in the tax year 22-23 and in 23-24. She'll die, the loss will get wasted. Is it clear? Everyone, please participate with me. Okay, now if you read here, it is written, now when the asset is in loss, why will you use gift relief? Why? Who defers the loss? Okay, we defer the gain. The asset is in loss. You can see the current market value of the property is less than the price Vesta paid for it and is expected to fall further. Now, one thing which some students might miss it, from base cost perspective, it is better to gift property on 31st December 2022. Why? Because property value is expected to fall further in 2023-24. If property is gifted at current value, which is higher, it will give higher base cost to Janice, which will reduce his future gains on disposal. Now, this is a point on which some students might make an error. See, we have to advise on the CGT and IHT implications. We have to advise on CGT and IHT implications. Okay? Now what we are saying is, if Vesta leaves investment property on her death, okay, if Vesta leaves investment property on her death, there will be no CGT, no gain, no loss. On death, there is no tax. If Vesta gives investment property on 31st December 2022, while she's alive, then there will be CGT implication on gift. As value of property is less, there will be capital loss. But since there are no other gains, so the loss will get wasted. And she'll die. When you die, the loss gets wasted. From base cost perspective, it is better to give property on 31st December 22 because property value is expected to fall further. If property is gifted at current value, which is comparatively higher, the value of property is falling more. For Janice, he'll get at a higher base cost. So at the time of his disposal, he will get a lower gain. See, currently the value is higher. So if the property is transferred at a higher value, it will be beneficial for the donee, because when donee will sell it, he will get less gain. Is it clear? Please confirm me. Everyone. Is it clear? Now, so now this was the CGT implication. Now we have to comment on inheritance tax implication. Let's participate and discuss inheritance tax implications. Now, what will be the inheritance tax implication? If Vesta will gift investment property to Janice on death, then from IHT perspective, what will happen? Can anyone tell me? Can anyone tell me what will happen from IHT perspective? If Vesta will gift investment property on death, then what will happen from IHT perspective? Fall in value will. What a disappointing answer. When you give something on death, there is fall in value will. If Vesta will gift investment property to Janice on death, then from IHT perspective, it will be assessed in death state. It will be assessed in death state. Okay, when something is assessed in death state, you have to pay death tax. Okay, nil rate band of Vesta is already used against her cash gift. Against her cash gift, if you read it here, against her cash gift of £350,000, against her cash gift of £350,000 made on 1st June 2022. Death tax will be charged at 40%. Fall in value relief applies when you make a lifetime gift and then till death the value of property falls. There is no fall in value relief on death state. Fall in value relief applies when you make one lifetime gift and then till the date of death the value of asset falls. Fall in value relief is issued when you make a lifetime gift and then till death the value falls. Here you are gifting on death. So how the value can fall more? Okay, so if Vesta will gift investment property to Janice on debt, then from IHT perspective, it will be assessed in debt state. Nil rate band of Vesta is already used against a cash gift of 350,000 made on 1st June 22. Debt tax will be charged at 40%. Now, if Vesta will gift investment property, will give investment property on what date? On 31st December 22. On 31st December 22. Then what will happen? Please tell me. On 31st December 22, that is during her life. That is during her life. Then it will be considered. Then it will be considered as a pact. Then it will be considered as a pact. Okay? Annual exemptions. Annual exemptions. Now again, wrong answer. Annual exemption will be available. I don't understand why you people are in so hurry. You people don't read the data. You are just rushing. Annual exemption is already used against her cash gift made on 1st June 2022, which is in same fiscal year. Okay? No lifetime tax on pact. No lifetime tax on pact. When Vesta will die in 2023-24, this pact will get chargeable and death tax will be payable on it. As nil rate ban will be used against cash gift of Vesta, therefore death tax on this pact will be at 40%. No taper relief will be available as gap between gift and death is of less than 3 years. You gifted in December 22 and you died in 23-24. Okay, from IHT perspective, tax will be same. Okay, one comment we missed out. As value of asset is falling, therefore, for death tax purpose, fall in value relief. Now here, fall in value relief will be available because it was a lifetime gift and then at death, value has reduced. Fall in value relief will be available, which will reduce value to revised lower value of death at time of death. Okay, so if you read the answer, believe me, it was very simple for 8 marks, but it requires alertness for small issues. You need to be alert for small points. If you read it from CGT perspective, if Vesta leaves the property on death, there will be no gain, no loss. If Vesta leaves property on death, there will be no gain, no loss. If she gives during life, there will be loss. But since she has no other disposals, the loss will get wasted anyways. Now, as the value of property is falling, it is beneficial to give the property now, because now it is giving you a better value. It will maximize the base cost for the donor. Okay. Okay, inheritance tax implications. If Vesta will gift investment property to Janice on death, then from IHT perspective, it will be assessed in death state. The rate of IST will be 40%. If she gives during life, it will be a PAT. Annual exemption is already used because same one gift in the same fiscal year. Nil rate band is used, value of asset is falling. So for death tax purpose, we'll use the value at death. Lifetime gift and then death, you will get fall in value. On death state, there is no fall in value. You have to consider the implications for both Vesta and Janus. We have considered all possible implications. There is no detail given about the Janus future. Okay, so if you look at this entire answer, it was a very easy answer, but it involved some basic rules and it was a bit lengthy answer. Okay, so it is September 2018, question number 3. Okay, so if you look at it, the first part was on takeover. The first part was on takeover issues. Okay, the first part was on takeover. We did the base cost allocation. Then on the cash portion, there was immediate gain. And on sale of shares, we calculated the CGT. Okay, then there was that if we delay the sale, what will be the benefit? The benefit will be that we'll get 2 annual exemptions. Okay, then there was something very easy, that what are the implications if Vesta make a gift during life and if she gives gift on death. So please explain the part about the PAT again and fall in value relief. Okay, now listen to me. See, when you make a lifetime gift and then the value of asset falls till death, okay, if you make a lifetime gift, okay, if you make a lifetime gift and then till death, the value of asset falls, you get fall in value relief. Okay, so if Vesta will gift investment property on 31st December 22 during her life, then it will be considered as PAT. Okay, annual exemption is already used against her cash gift made on 1st June 22, which is in the same fiscal year. No lifetime tax on PAT. Now, when Vesta will die in 23-24, this PAT will get chargeable and death tax will be payable on it. Now, the nil rate band is already used because a cash gift exists of 350,000. You can read it here. Okay, has made one previous lifetime gift of 350,000 times cash to her son. Okay, no taper relief will be available because gap is of less than 3 years. Now, the value of asset is continuously falling. The time at which you made lifetime gift until the death, the value will reduce. The value will fall. So since the value of asset is falling after making lifetime gift, you will get fall in value. Is it clear? Please confirm me. Is it clear? Okay. Anyone, any query? Yes, what do you want to ask? Okay, so we completed complete paper of December 21, and then we are doing this practice exam 2. We have done question number 3. Now we are moving towards question number 4, and as promised, I'll share the recordings of question 1 and 2 on my YouTube channel playlist. I've showed you people so that you people can practice it. December 21 already completed. June 21 shared on my playlist, and the third one, this practice exam 2, we are doing 2 questions in the webinar and 2 I'll share on my playlist. So 3 papers, my promise, will be completed. Now it will be your turn to do the mock exam and send me for marking. Now there are some questions. IST Installment, yes, IHT installment is available for all death taxes. Okay. Sir, please could you upload the answer to this question? Yes, once I'll complete the webinar sessions today, I will make a Google Drive where I'll share the answer for all 3 papers, and I'll share the link of the Google Drive on the WhatsApp group. I'll share the link of the playlist for all the video recordings. I'll share the link of the Google Drive where all 3 paper solutions will be provided. Summary notes will also be provided. Okay. Anything else? Any query? Okay, so now let's move to question number 4. I want you all to concentrate, okay, because this will be the last question of our live sessions. Let's look at it. You should assume that today's date is 7th December 2022. You should assume that today's date is 7th December 2022. Demeter has recently taken up a new employment and is seeking advice on the tax treatment of certain components of his remuneration package and relief available to reduce the chargeable gain on the sale of his house. The following exhibit available on the left-hand side of the screen provides information relevant to the question. The information should be used to answer the question within your chosen response option. So let's read the scenario, what he is saying in it. Just a second. Okay, now. So what he is saying in the question. Demeter is UK resident and domiciled. Demeter is UK resident and domiciled. Demeter commenced employment with Poseidon Limited on 1st December 2022. Will have no source of income other than from Poseidon Limited in all relevant future tax years. Demeter will be a higher rate taxpayer in all relevant future tax years. Demeter has relocated to London, a city more than 150 miles. London from Manchester, a city more than 150 miles north of London, to take up this employment. Remuneration package from Poseidon Limited. Demeter will receive an annual salary of £220,000. On 1st December 2022, Poseidon Limited made a one-off lump sum payment of £20,000 to Demeter as an inducement to take up the employment with his company. Now, these inducement payments are fully chargeable for employment income. Okay, it's not a termination payment. It is fully chargeable for employment income. Poseidon Limited paid Demeter £5,000 towards his cost of relocating to London. Now, if you people remember, relocation cost is exempt up till £8,000. The company is also paying him £1,500 each month for 4 months from 1st December 2022 towards renting accommodation in London until he purchases a new house on 1st April 2023. On 1st December 2022, Demeter was granted share options in Poseidon Limited, non-tax advantaged, unapproved share scheme. From 6 April 23, Demeter will participate in Poseidon Limited's occupational pension scheme. Relocation to London. Demeter incurred cost in relation to his relocation to London of £6,000. This amount includes state agent fees of £2,800 in connection with the sale of house in Manchester on 31st October. Demeter signed a 4-month lease for a flat in London from 1st December 22 at a monthly rent of £1,700. Now here I want to make one concept clear for you people. Whatever amount you spend on your relocation, is not an allowed expense. Listen to me. whatever amount you spend on your relocation is not an allowed expense. I'll repeat it again. Whatever amount you spend on your relocation is not an allowed expense. The only relief in relation to relocation is that if your employer pays you certain amount, it will be exempt benefit up till £8,000. I'll repeat it again. Whatever amount you spend on your relocation is not an allowed expense. Whatever amount you spend on your relocation is not an allowed expense. It is your personal issue. If your employer pays you certain amount for relocation, it is exempt up till 8,000. Excess will be charged. Okay. Then there is house in Manchester. Demeter purchased house on 1st December 2010 and lived in it as his main residence. Demeter let the top floor of the house, comprising 30% of the house, to tenants from 1st February 2012 to 31st October 2022. The tenants did not share Demeter's living accommodation or take meals with him. Demeter continued to occupy the remainder of the house as his main residence until 31st October, when the entire house was sold. The sale gave rise, before any reliefs, of £94,000. Demeter did not own any house throughout the period from 1st February 2010 to 31st October 2010. There are some issues relating to PPR, principal private residence. There are some issues relating to principal private residence, PPR, to principal residence, PPR, and letting relief. Okay. Demeter's pension contribution. Demeter has made tax allowable pension contribution of £40,000 gross to personal pension plans for the last 5 years, and will continue to do so in the future years. So if someone already makes a contribution of 40,000 every year, his annual allowance is already used. If someone already makes a contribution of 40,000 every year, his personal annual allowance of 40,000 is already used. From the tax year 23-24, Poseidon Limited will contribute 10% of Demeter's salary in his pension plan. So this employer contribution will exceed his annual allowance. See, do you people remember the annual allowance of £40,000 every year? Do you people remember the annual allowance of 40,000 every year? Now, he already makes a contribution of 40,000 every year. This means his annual allowance limit is already used. So if his employer will make some more contribution, that will create an excess contribution. And then there is Poseidon Limited share scheme. On 1st December 22, Poseidon Limited granted Demeter 3,000 shares in non-tax advantage, unapproved scheme, at a 5% discount on the market value of the shares on that date. The market value of shares on 1st December 22 was 4.2 per share. Demeter will excise the shares on 6 April 28 and will immediately sell the shares. Poseidon Limited believes that the market value on 6 April 28 will be £6 per share. So this is the entire scenario. Let's read the requirements and let's start solving it. Part A. Explain the extent to which the receipt of the lump sum inducement payment and the relocation package in relation to Demeter's move to London will give rise to taxable income for him. 5 marks. So here we have to talk. Here we have to talk on the lump sum inducement payment and the relocation package. Believe me, it's very simple. I want you all to participate, please. I want you all to participate with me. Question number 4. Demeter. This is the requirement. Okay. Inducement payment given to Demeter will be subject to normal taxation. Okay, will be subject to normal taxation. It will be a chargeable employment income amount for him, as there are no tax reliefs available for inducement payment. So first of all, let's kill the inducement payment. First of all, we killed the inducement payment. It will be simply taxable. Okay. First of all, we kill the inducement payment. It will be simply taxable. There will be no relief for it. Is it clear? Now let's move to the relocation package. In relation to relocation package received by Demeter, he will get an exempt benefit up till £8,000. Excess amount will be taxable employment income for him. Okay, now listen to me. Relocation package received by Demeter includes how much? Let's read it. Includes how much? The relocation package includes Poseidon Limited paid £5,000 upfront and £1,500 for 4 months. Okay. Relocation package received by Demeter includes £5,000 for relocation and a rent compensation of £1,500 into 4 months. How much? £6,000. Total amount received in relocation package is £5,000 plus £6,000. It's £11,000. Okay. Exempt benefit is £8,000. Therefore, rest amount of 11,000 minus 8,000, 3,000 will be a chargeable benefit. Okay. Amount spent by Demeter himself on relocation will not be an allowed expense, and there will be no relief on it. How much he has spent? He has spent how much? He has spent 6,000 for relocation, and he paid rent for 4 months at 1,700 per month. He has spent 6,000 and 1,700 4 months. He has spent 6,000 for relocation and rent of 1,700 per month into 4 months, which will be 6,800. He has spent 6,000 for relocation and rent of 6,800. Total expense of 6,000 plus 6,800 is equal to 12,800 will not be an allowed expense. Believe me, it was very simple. It cannot be more easy than this. As far as the inducement payment is concerned, inducement payment is a normal taxable benefit. As far as inducement payment is concerned, it's a normal taxable benefit. There is no debate on it. So why tax authorities don't allow this as an expense? Because it is your personal expense. If someone will buy an aeroplane for relocation to a new job, it's your personal issue. Why tax department will give you relief for relocation? They say that take the amount from the employer, take compensation from employer. It's your issue with the employer. And if the employer is giving you a compensation, we can give you an exemption up till £8,000. Okay. So whatever you relocate, how you go to your office, it's your issue. It's not the issue of tax department. Why they'll give you allowed expense? Because someday someone will come that also give me an allowed expense for the petrol I spend daily for going to office. It's your issue. Take the compensation from the employer. Maximum favor we can do is we can give you an exempt benefit if your employer is paying you anything. Okay. It's not an issue of tax department if you are relocating. It's your issue. You relocate for a better salary. So it's your issue with your employer. Take compensation from your employer. Is it clear? Say, okay. So in relation to relocation, the only benefit is exempt benefit of £8,000. Now the relocation package, it's total of £11,000. From this 11,000, 6,000 is exempt. Excess will be chargeable. Now, whatever you spend yourself, it's your issue, no allowed expense on it. So if you look at it, it was an easy requirement of 5 marks. Explain the extent to which 20,000 lump sum inducement payment and the relocation package in relation to Demeter's move to London will give rise to taxable employment income for him. Let's move forward. Identify and calculate. Identify and calculate with brief explanation the reliefs available to Demeter to reduce the chargeable gain of 94,000 on the sale of his house in Manchester on 31st October 2022. Now, this is a requirement of 6 months. Let's look at it. Believe me, this is also very easy. Now, I always feel everything is easy. Is this true? No, it's not true. When the requirements are difficult, I do tell that it's a difficult one. Okay. So identify and calculate the reliefs available to Demeter in relation to chargeable gain on the sale of his house in Manchester. Can anyone tell me what will be the relief in relation to house in Manchester? Can anyone please tell me? Yes, PPR, because he lived in it as his main residence. Okay. Demeter will get principal private residence relief on sale of his house in Manchester as it was his main residence and he lived in it. Okay, so the Demeter will get principal private residence relief, PPR. Now let's look at it. I want you all to concentrate on it. Chargeable gain before any relief. Chargeable gain before any relief is £94,000. Please participate with me. We will get principal private residence relief. Okay. And then there will be letting relief also because the property was let out. And then we will get the chargeable gain. So, principal private residence relief working 1, letting relief working 2. Let's do the workings. So, let's do the principal private residence and the letting relief. Now, you all know that when we talk about principal private residence relief, it is about doing it with patience. Because in PPR, there are months involved and a lots of counting involved. Because if you will rush while calculating PPR, you will surely mess up with the months. Okay? Let's look at it. I want you all to concentrate on it. So, here will be the months. Okay? Here will be total. Here will be exempt months. And here it will be chargeable months. And here we will write the comments. Okay? Let's start. Everyone, are you people with me? Now, what is the purchase date of house? He purchased the house on 1st February 2010 and lived in it as his main residence. D-meter let the top floor of the house to tenants from 1st February 2012. Now, from 1st February 2010, 1st February 2010 to 1st February 2012. Please listen to me. From 1st February 2010, he purchased the house. He purchased the entire house. He let the top floor to the tenants from 1st February 2012. So from 10 to 12, 1st February 2010 to 12, how many months? 24 months. These are exempt. Why? Whole house was actually occupied by D-meter. Okay? Whole of the house was actually occupied by D-meter. Are you people listening to me? Just a second. Whole house was actually occupied by D-meter. Then, on 1st February 2012, what happened? From 1st February 2012 to 31st October 2022, he let out 30% of the house. Okay, to 31st October. Now, October is July, August, September, October. It's 10th month. Okay, there was 70-30. D-meter continued to occupy the remainder of the house as his main residence until 31st October 22, when the entire house was sold. Now, when you sell the house, listen to me. When you sell the house, last 9 months before the disposal are always exempt. Last 9 months before the disposal are always exempt. So how will I pick up the last 9 months? See, 31st October 22 is the disposal date. Last 9 months. So I think it will be 1st February 2022 to 31st October 2022. February, March, April, May, June, July, August, September, October. These 9 months, I will repeat it again if someone is getting confused. Last 9 months before disposal will be exempt on whole house as letting period was also occupied for at least 1 month during entire ownership period. Last 9 months exemption is available on the entire house. So if I move the slot of last 9 months below, so it will be 1st February 2012 to 1st February 2022. So 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 10 years. So in these 120 months, 70% was occupied which is 84 months, and 30% was let out, which is 36 months. 70% was occupied and 30% was let out. So if I make a total 120 plus 24 plus 9, it's 153 months. 24, 84 and 9 is exempt. It's 117 months, and 36 months are chargeable. So if we talk about principal private residence relief, it will be 94,000 of the gain. I'll repeat the things again, so no need to worry. 153 months divided by 153 and multiplied by 117 months. 94,000 divided by 153 into 117. So the PPR will be 71882. This is the PPR 71882. And the letting relief will be lower of three things. I hope you people remember 40,000 pounds, PPR amount 71882, and chargeable gain attributable to chargeable letting months. 94,000 divided by 153 months multiplied by 36 months. I will repeat it again, so don't worry. Just let me complete it first. So it's 22,118. So obviously this one is lower. 22,118. Our chargeable gain will fall to 0. So if you look at this question, one student has asked, should we round the months while applying the percentage? Yes, if there is any rounding off, you can round it off. You will round off. Okay, so this was some basic calculation. Yes, it was a bit complex because whenever we do the PPR, it's a bit complex, but it's basic. Even if you remember your basic taxation, the PPR has always been a basic calculation. So there was chargeable gain before any relief. It's 94,000. Just be alert for the months, because if your counting of months will be wrong, you'll lose marks. Now you have to look at principal private residence relief and the letting relief. You will break the entire ownership period. The house was purchased in February 2010. Demeter purchased the house on February 2010 and lived in the house. The letting issue started from February 12. The letting issue started from February 12. So February 10 to February 12. Complete 24 months are exempt. Complete 24 months are simply exempt. There is no debate in it. Complete 24 months are straight away exempt. There is no debate on it. Now, February 12, if you read the scenario, February 12 to October 22. Now, I didn't took October 22 here. Why? Because he sold the house in October 22. He sold the house on October 22. So last 9 months are picked out separately, because last 9 months are exempt on the whole property. February 22 to October 22, last 9 months are exempt on the entire property. Now the remaining slot in between, the 10 years, 120 months, 70% was occupied and 30% was let out. Once you have made the split of the entire ownership period, then it's just very easy. The gain is 94 divided by total months multiplied by exempt months to get the PPR. Letting relief 40,000, PPR, and gain attributable to letting months. Is it clear, everyone? Is it clear? Okay. Now, so if you read the requirement, it was a requirement of 6 marks. Identify and calculate with brief explanation the relief available to Demeter to reduce the chargeable gain of £94,000 on the sale of his house of Manchester on 31st October 22. So the relief available was PPR and letting relief because this was his main residence. Okay. Is it clear? Anyone, if you people can confirm me if there is any query. I believe that this is PPR calculation is normally complex, but it's not difficult. Okay, now let's move forward. Explain with supporting calculations the tax consequences for Demeter participating in Poseidon Limited's occupational pension scheme in the tax year 23-24. How many marks? 5 marks. Believe me, it's also a very easy one. It is also an easy one. For Demeter participating explain with supporting calculation the tax consequences for Demeter of participating in Poseidon Limited's approved occupational pension scheme in the tax year 23-24. Now I want you people to participate and tell me the answer. Everyone, please confirm me if you people are still with me. Hello, everyone. Please tell me. Demeter has made tax allowable contributions of 40,000 in the pension plan for the last 5 years and will continue to do so in the future tax years. From the tax year 23-24, Poseidon Limited will contribute an amount equal to 10% of Demeter's annual salary to its approved occupational scheme. Now, what is the Demeter's annual salary? What is the Demeter's annual salary? Demeter's annual salary is £220,000. Demeter's annual salary is £220,000. How much his employer will contribute? How much his employer will contribute? It will contribute 10%. Demeter will make no contribution to Poseidon Limited pension scheme. I have a question from you. If Poseidon Limited will contribute 10% to Demeter annual salary to occupational scheme, what will be the tax consequence? Will anyone tell me? If your employer contributes in your pension scheme, what is the tax consequence? Anyone? Okay. If Poseidon Limited will contribute in occupational pension scheme for Demeter, it will be an exempt benefit for Demeter. Amount of employer contribution is 220,000 into 10%, is 10% of his gross of his salary, which will be £22,000. This amount will be exempt benefit in employment income for Demeter. However, as Demeter makes a gross personal pension contribution of £40,000 every year, his annual allowance is already used. See, it is written, he makes a tax allowable contribution of 40,000 to personal pension every year. Okay, now how much does Demeter earns? Demeter is a higher rate taxpayer. He will earn a salary of 220,000. Okay, he will earn a salary of 220,000. He makes a personal pension contribution. He makes a personal pension contribution of £40,000 every year. Okay. However, as Demeter makes a personal pension contribution of 40,000 every year, his annual allowance is already used. His annual allowance, now this was a point which some students may miss, will be £40,000, and it will not be tapered as his threshold income is below £200,000. Do you people remember the threshold income? Do you people remember the threshold income? Gross PPC, personal pension contribution, £40,000. Threshold income, 180,000. Okay. When your adjusted income exceeds, when your adjusted income exceeds 250,000, your annual allowance gets diminished. Now, I use threshold income for developing a comment. You can also use adjusted income. You can also calculate his adjusted income. That is, adjusted income is also below 180,000. His adjusted income is also below the limit. Okay. You can use the adjusted income, or you can use the threshold income as a comment. Okay, the adjusted income limit is 240,000. His adjusted income is also less. No. In order to diminish the annual allowance, you have to pass both the criteria. Your adjusted income should exceed 240,000. Your adjusted income should exceed 240,000, and your threshold should also exceed 200,000. There are two barriers. Your adjusted income should exceed 240, and your threshold should exceed 200. Both should be exceeded for diminishing annual allowance. I will repeat it again. Listen to me. If Poseidon will contribute 22,000, it will be exempt benefit. Okay, the first comment. Demeter's annual allowance is already utilized. Now, annual allowance is not tapered. Why it is not tapered? The taper means reduced. Annual allowance reduces due to two things. Your adjusted income should exceed 240,000, and not or, and your threshold should be more than 200. Now, what is adjusted income? Your income plus employee and employer contributions. So if his income is 220 and I have his employer contribution of 22, so 220 plus 22 will be 242. He will be below the adjusted income threshold of 250. So you can use that for comment also, or you can use threshold for the comment also, because both have to exceed for annual allowance to get tapered. Considering that entire annual allowance, of £40,000 is already used against gross personal pension contribution of Demeter, employer contribution of £22,000 will create an excess contribution. It will be charged as a non-saving income for demeter. I'm repeating the concept of tapering. Okay, I'm repeating the entire part. Just listen to me. The question was explained with supporting calculation the tax consequences for demeter of participating in Poseidon Limited approved scheme. Now, basically, Poseidon Limited is saying that we will contribute 10% in the pension plan for you. Now, 10% of your salary. His salary is 220,000. 10% of 220,000 is 22,000. Now, this is the basic one thing. When your employer contributes, it becomes an exempt benefit. Now, demeter makes a contribution of 40,000 every year. Demeter makes a contribution of 40,000 every year. This uses his normal annual allowance of 40,000. Now, the question is that what about the tapering, the reduction of annual allowance? The annual allowance gets reduced when two criteria are satisfied. Adjusted income exceed 240,000, adjusted income, and threshold income exceed 200,000. Both must exceed at the same time. Adjusted income exceed 240,000 and threshold income exceed 200,000. Both must exceed for tapering of annual allowance. Now his adjusted nor threshold, nothing is exceeding. Nothing is exceeding. Why nothing is exceeding? Because his existing salary, which is his only income. See, the relocation and inducement amount is given in a different fiscal year. You can see that. The contribution is in 23-24, whereas the lump sum amount, if you look at the lump sum amount, it was given in December 22. December 22 is 22-23. Whereas here the question is talking about 23-24. It is about different fiscal year. You are mixing up the data. You are not looking at the fiscal years carefully. You have to look at the dates carefully. Here we are talking about 23-24. 23/24. Whereas the relocation and inducement was given in 22-23. It was a different fiscal year. It was a different fiscal year. Okay. And he is an additional rate taxpayer in 23-24. Okay. It is a different fiscal year. Okay. So now we use threshold income as a comment. We said that net income less gross PPC, his threshold income is less than 200. So there is no tapering of annual allowance. If a student would have used adjusted income as a criteria, then also it will be sufficient. You can use either adjusted or threshold to comment on tapering of annual allowance. Because tapering will only apply when both have exceeded. So here both are not exceeding. Okay. Now considering that annual allowance is 40,000 and that is already used. So the employer contribution of 22,000 will create excess contribution on which he has to pay tax at non-saving income base. I hope that it is clear. Please, if there is any other query, ask. Okay. Now, let's move towards the last 4 marks. Again, explain with supporting Sir, we do not have to calculate the charge. You can calculate it. You can calculate it. Okay. You can apply 45% and you show because he is an additional rate taxpayer. Explain with supporting calculation the tax consequences for demeter for participating in Poseidon Limited unapproved share scheme in respect of the grant, exercise, and sale of the shares. Okay, so now we have to comment on this unapproved share scheme. Now we have to comment on this unapproved share scheme. It's a easy requirement of 4 marks. Okay, just give me a second. Let me adjust it. Now, explain with supporting calculations the tax consequences for demeter of participating in Poseidon Limited's non-tax advantaged unapproved share scheme in respect of the grant of the options on 1st December 22 and the exercise of the options and subsequent sale of the shares on 6 April 28. So, if you look at it here, on 1st December 22, Poseidon Limited granted demeter options over 3,000 shares in its non-tax advantaged unapproved scheme. Can anyone tell me the tax consequences of unapproved scheme? Can anyone tell me? When the scheme is unapproved, grant date, no tax. On exercise date, there will be employment benefit. On disposal date, there will be CGT. Okay. On grant date of 1st December 2022, there will be no tax implications for demeter. Okay. On grant date of 1st December 22, there will be no tax implications. In relation to participation in Poseidon Limited's non-tax advantaged share option scheme, there will be no tax implications on grant date of 1st December 2022. Okay. On exercise date of 6 April 2028, the exercise date, demeter will exercise the share options on 6 April 28. On exercise date of 6 April 2028, employment benefit will be assessed on demeter. Okay, the employment benefit will be assessed. Let's calculate the employment benefit. Market value on exercise date. What is the market value in exercise date? 3,000 shares. The market value on exercise date of 6 April 28 is £6 per share. Okay. Believe me, it's very simple. Market value on exercise date 6 April 2028, 3,000 shares into £6 per share. So it's £18,000. Now, cost, or I would say amount paid by demeter. What is the amount paid by demeter? Can anyone tell me? What is the amount he paid? Okay. On 1st December, Poseidon granted 3,000 shares in its non-tax advantage scheme at 5% discount on the market value of shares on that date. Now, the value on that date was 4.2 per share. So he was given at 5% discount to value on that date. 4.2 pounds multiplied by 95%. Okay. Amount paid was 95% of the value on grant on 1st December 22. 95% multiplied by 3,000 shares, so it's 11 970. So what is the employment benefit? Believe me, it's very easy. 6030. Only thing where you can make an error was amount paid by demeter. Income tax will be payable on this employment benefit. Okay. Amount paid by demeter was 5% less than market value on grant date of 1st December 2022. Market value on grant date was 4.2 per share. Demeter paid 95% of it because 5% discount was given. Okay, so why they haven't given the exercise price? They have given you the exercise price, but they just used different wording for it. Okay, if you read, the exercise price is given on 1st December 22, Poseidon granted demeter over 3,000 shares at 5% discount on the market value of the shares on that date. So the exercise price is 5% discounted on market value of grant date. The market value of grant date was 4.2 per share. The exercise price is given. He just used different wording for it. That exercise price is 95% of market value on grant date. He will be given shares at 5% discount to the market value on that date. Now that date, the 1st December 22 was 4.2 per share. It's given. The exercise price is given. Okay, just you need to read it carefully. Demeter will exercise the share options on 6 April 28 and will immediately sell the shares. Now, when he will immediately sell the shares, there will be no CGT. On disposal date, capital gains tax will be assessed. However, as Demeter will sell shares on exercise date, there will be no CGT. Why there will be no CGT? Market value, the disposal proceed. What will be the disposal proceed? This will be the disposal proceed. What will be the disposal proceed? 18,000 pounds, because he's selling it on the exercise date. Less market value on exercise date, because in unapproved plans, we have already been assessed till the market value on exercise date. In unapproved plans, we don't deduct the cost. Okay. In unapproved plans, we don't deduct the cost. We have already been assessed. If you listen to me carefully, we have already been assessed till the market value on exercise date. So the subsequent gain is assessed. I will repeat it again. In relation to participation in Poseidon Limited, non-tax advantage scheme, what tax consequences Demeter will face? On exercise date, on grant date, there will be no tax. When the options are granted, there is no tax. On exercise date, there will be employment benefit. On exercise date, there will be employment benefit. Market value on exercise date, amount paid, you will get the employment benefit. Okay. Now the exercise price was given in a different manner. That the exercise price was 95% of market value on grant date. That this was a simple glitch which he gave. In advanced tax level, this should be tolerated. On 1st December, Poseidon Limited granted demeter options over 3,000 shares in its non-tax advantage scheme at a 5% discount on the market value of shares on that date. Now, the market value on that date was 4.2. Yes, the NIC is required to be paid, but the requirement states that we have to ignore the NIC. Okay, so this is the employment benefit on which income tax and NIC both will be paid, but the question says to ignore NIC. On disposal date, the CGT is assessed, but since the plan is unapproved, we calculate CGT on the value which exceeds the value on grant date. Now, since it is sold on the same date, there is no gain. So if you look at it, believe me, this was a very easy question. Okay, so the meter. Okay, so I hope there is no other query. The first part was very simple. It was relating to inducement payment and relocation package. Then there was some PPR and letting relief. Then there was a pension scheme issue. And the last one was unapproved share scheme issue. Now, if you look at the entire series of sessions, just evaluate the first paper, the very first question we did. That was a bit difficult for all of you. But as we did the papers, the things got easier for you. Now, with the time, when you will do more and more questions, the things will get more easy for you people. The things will get more easy for you people. The things will get more understandable for you people. You will get more confidence that yes, I can do. Okay. Now, since today we stand at 27th of May, okay, and if I'm not wrong, your examination is like on 7th of June. So 1, 2, 3, 4, 1, 2, 3, 5, 6, 7, 8, 4 days, 8, 9, 10, almost 10 days to the exam. So what should be our approach to these 10 days? My advice is, as I told at the start of the today's session, that in these 10 days, you should try and give your first half to past paper practice. What you can do is that on the first 3 days, you can complete these past paper recorded sessions. If you have already taken the webinar, so this means that you have already completed 1.5 paper with me. We completed December 22 complete, and we did 3 and 4 questions today. So now what you can do is that you can do remaining 1.5 paper, like half paper of this practice exam and 1 paper of June 21. Those who haven't taken the webinar and they'll just listen to the recording, they can spend 3 days, daily 1 paper they can complete. It's like 4 or 5 hours for 1 paper. Once you have done all these 3 papers, daily in the morning, in the first half, give time to the past papers. You are fresh. Just listen to these 3 papers. Don't solve them, just listen to the sessions for these 3 papers. Once you are done with them, in the first half, do the past paper. In the second half of the day, do your revision, revise the rules, go through the summary notes, go through the register. From whatever tutor you have studied, revise your register. Once you have done these 3 papers, then on the 4th day, attempt the mock exam. The mock exam is available on the ACCA practice platform. Okay, send it to your tutor for checking. If your tutor is not checking, then you can send me. I'll try and mark it for you people. Okay, once you are done with the mock exam, you will get a confidence. Then just don't stop. Do few more papers on the practice platform. At least solve 2 or 3 other papers on your own. Now, those students who are my own students, they have got almost 7 past paper discussion with me. I've spent almost 7 past paper discussion with them. So do those papers. Do some papers on your own. If you need any help, you can contact me. So try and give your maximum. You try and give your maximum. Do as much yearly papers as you can. Now, many students ask for some important topics. So I always say that in advanced taxation, you cannot particularly identify important topics. In advanced taxation, you cannot particularly identify advanced topics, but still there are some topics which are tested in routine. Okay, some topics are tested in routine. So now what are those topics? Individual overseas issues, it's very routine topic. Basis period calculation, share schemes, employment share schemes is tested too much. Individual losses, corporation losses, group losses, standalone company losses. Now these are the topics which are tested too much. Then closed company issues in corporation taxes, IHT. In CGT you can revise the release portion. Okay, so give your best, revise the rules, use the summary notes. You can use small sticky notes, like if you are solving the past paper and you find some new rule, you can write it on the sticky note and you can paste it on your summary notes. Make a complete and comprehensive document, revise the summary notes again and again, and on parallel, on side by side, do some complete past papers. Okay, so we completed December 21 paper. We completed half of this practice exam. I will upload the December 21, half of this paper which we have done in the webinar, and half more on my playlist. The webinar recordings will be available on ACCA Pakistan YouTube channel also, but that will include what we have discussed in this webinar. I have added few more complimentary sessions for you people on my playlist, so you can go and solve it from there. Okay, you have to do the mock, you have to send it to me for marking. Okay, I hope so. I give you all the best wishes that you can pass the exam with good marks. Just do more and more practice and go in the exam with confidence. If you need any handouts, you can message me on my WhatsApp number. My WhatsApp number, you people, I shared it on the very first day. I shared it from in the very first day, if you people remember. 0092 345 8099 so you can contact me on my WhatsApp number. On the WhatsApp group also I'm sharing the documents, so whatever support you need, I'm available for that. Okay, but you have to solve the mock and send me for marking. I hope that this session was beneficial for you and it will add in your passing chances of the exam. Okay, thank you everyone, and thank you for attending the complete session.